All right, so you ever look at a stock chart and just see the price completely fall off a cliff? You're just staring at it thinking, what in the world just happened? Well, today, that's exactly what we're going to do. We're going to play financial detective. We're going to crack open a real technical analysis report for a stock, ticker is PAVS, and piece together the clues to understand the story behind a really dramatic stock crash. So let's dive right in and look at the evidence. Our investigation starts with just a single number. This is the current price of our mystery stock, 5.5 cents. I mean, on its own, that number doesn't really tell you a whole lot, does it? But like any good mystery, it is all about the context. And boom, here's the context. Sometime in the last year, this exact same stock was trading for $1.50. Now, 5.5 cents. If you do the math, that is a collapse of over 96%. This wasn't just a bad day or a little dip. This was a catastrophic fall. And our job is to figure out what the data tells us about how it got to this point. So first things first, let's examine the scene of the event. We need to get a handle on the timeline of this collapse to really appreciate just how sudden it was. The speed of this thing is just staggering. Check out this timeline. On November 28th, the stock is doing fine, trading over $1. Then, just one single trading day later, on December 1st, the bottom completely falls out. It craters, closing at under 8 cents. The very next day, it sinks even lower. This all happened in the blink of an eye. And that brings us to our central question. The price action is frankly shocking, but the technical report, that's our case file. It is filled with all the data, all the indicators that are going to serve as our evidence. So let's begin the investigation. Okay, our first clue is the trend. Before we even look at the crash itself, we have to ask a basic question. Which direction was this stock already heading? Was it flying high or was it already losing altitude? To figure that out, we use a tool called a moving average. The best way to think about it is like this. If you're on a long road trip, your speed is constantly changing, right? The moving average is like your average speed over the last hour, or maybe the whole day. It just smooths out all those little ups and downs and tells you your general direction of travel. And well, the data here is it's stark. The current price is that 5.5 cents, while the average price over just the last 20 days was almost 59 cents. And the long-term 200-day average was nearly $1. So the really crucial point is the stock is trading way below both its short-term and its long-term average prices. It's not even in the same ballpark. So the verdict from our first clue is crystal clear. This wasn't some healthy stock that just suddenly got sick one day. Nope, it was already in a confirmed, pretty severe downtrend. The crash was an extreme event for sure, but the direction of travel was already pointed way, way down. So we know the direction was down, but that's not the whole story. Our next clue is about the force behind that move. How fast was the price actually falling? This is where momentum comes in. For this, we're going to look at the Relative Strength Index, or RSI. The easiest way to think about RSI is to just picture a speedometer for the stock's price. It tells us how quickly and how hard the price has been moving up, or in this case, down. The technical report gives us an RSI value of 31.30. Now, on a scale that goes from 0 to 100, that number is definitely on the low end. But what does that actually mean? Well, in technical analysis, a reading below 30 is a major red flag. It's considered oversold. All that term means is that the selling has been so intense and so fast that the stock might be running out of people left to sell, at least for the moment. And our value of 31.30 is right on the edge of that extreme territory. So our momentum clue adds a really crucial layer to the story. The price didn't just drift lower. It plunged with incredible speed and force, pushing the stock into that extremely oversold state. The speedometer on this thing was completely redlining on the way down. Now for our third and final clue. And honestly, this is the one that really brings the whole picture into focus. We've looked at the direction and we've looked at the speed. Now let's look at the conviction behind the move, the trading volume. Trading volume is simply the number of shares that changed hands. So why does it matter so much? Because it tells you how many people are participating. A price move on low volume is like a whisper, but a price move on high volume, that's a roar. It shows there's a strong consensus. Now just look at this. On a normal day in late November, about 22,000 shares of this stock were traded. But on December 1st, the day of the crash, over 304 million shares were traded. That's not a roar, that's a sonic boom. To put that in perspective for you, that is over 13,000 times the normal trading activity. It's just unbelievable. And this, right here, is the smoking gun of our investigation. The price didn't fall because of a lack of interest. It was actively and violently pushed down by a historic, unprecedented wave of selling. It's like the entire market was rushing for the exact same tiny exit door all at once. So, we've gathered all our evidence. We have the trend, the momentum, and the volume. Let's step back and put all these pieces together to deliver the report's final verdict. Our investigation revealed 3 key facts. First, the stock was already in a bad downtrend. Second, the crash itself was a rapid, intense plunge that pushed it into that oversold territory. And third, and most importantly, it was driven by an absolutely explosive, record-setting surge in selling volume. So the technical report tells us a very clear, unambiguous story. It doesn't use words like panic or bad news, but the data itself is screaming it. This was a rapid, high-volume price collapse driven by overwhelming and decisive selling pressure. But here's the final and most important takeaway. A technical report is brilliant at showing you what happened and how it happened, but it can't tell you why. Was it a bad earnings report? A failed clinical trial? That's a whole different kind of investigation. The data has told us the story of the crash, so the real mystery now is what happens next. With the sellers seemingly exhausted and the price this low, is this the end of the story, or could it be the beginning of a brand new one?